All right, welcome back, everybody. Now, the rand has, in recent days, plummeted against the US dollar and the British pound. Various factors are said to contribute to this, such as possible interest rate hikes in the US, Chinese market uncertainty. Well, let's get some analysis this morning. Tendani Mantshimuli is an economist at Liberty Insurance. She's with us in studio to talk a little bit about the currency and, of course, our economy in general. Good to have you. Thank you so much for coming in this morning.
Good morning, Liam.
All right, so, I mean, we had such an awful day with the currency hitting all-time lows at the beginning of this week. What is going on? I mean, those two reasons I gave, US interest rates, Chinese economy, is that it?
Well, the two reasons you mentioned ensures that there's kind of some risk aversion to emerging markets, and we've seen this hammering, the currency uncertainty hammering against all emerging markets. So this is not a uniquely South African situation. If it had been uniquely South African, and I'm not saying we don't have our own issues to deal with, if it had been uniquely South African, you would have seen some change in the currency when interest rates were raised by the central bank. You would have seen certainly some more downward movements when you saw the GDP numbers, which came out quite negative in the past couple of weeks. So mostly what's happening now is an international situation where emerging markets are not coming out very well at all, including South Africa. When
we compare ourselves to other emerging markets, and I do know that, I mean, there is a huge comparison, that South Africa, as badly as we're doing, you look at our currency in comparison to others, we haven't lost as much as many other currencies.
We haven't, and you might also notice, Leanne, that we have lost grounds against the dollar, certainly against the euro and the pound, but we have gained ground against some other emerging market currencies. So South Africa, as you know, it's a small open economy, and what happened in China with the lower demand has hurt commodity prices, and South Africa exports a lot to those countries. Technically, if you see the rand plummeting as it did, you should have seen exports rising to counter that. Now, that is where our own domestic matters come in, where you had some industrial action in certain sectors of the economy. For you to take advantage of a lower rand and export more, you have to have inventories, you have to have production going on. And that is where our own domestic issues come in, where you see that production is not where it ought to be, where you see that some industrial action does hurt us if in terms of our ability to take advantage of the rand. The other thing is that you don't turn around production that quite quickly. Production cycles take long. The other thing, as you know, of course, that hampered production is the electricity problem, which, by the way, we haven't seen as much load shedding in the month of August as we've seen in the past. Hopefully, that is going to continue, that is going to hold on, and production can resume at full capacity, and large producers are not going to be asked to cut back on their electricity consumption, because that affects the ability to produce.
Yeah, it certainly is. I mean, it's been exceptionally positive with the fact that we're going on for almost, I'm not sure, I think it's about 30 days or so.
It should be 30 plus now.
30 plus days that we haven't had load shedding, which is good, but the Minister has warned us we're not out of the woods and don't think that load shedding isn't a reality. So we've got all of these factors compounding us right now, and particularly the electricity crisis. We're reading headlines where one of our biggest contributors, mining, is struggling. Another big contributor, tourism, is struggling. What does this mean for our economy? We've got a weak currency, all of these sectors are struggling. There's huge talk of recession. I mean, what are your views on this? So
a technical recession would be if the third quarter of this year as well is going to be negative, then you're technically in a recession, because it has been 2 consecutive quarters of negative growth. Part of the reason why the second quarter didn't do well was, as you said, manufacturing, agriculture, and mining didn't do that well. So this morning we're expecting the manufacturing data for July to come out. Manufacturing has really been hit hard by low domestic demand, because consumers are not in a position to buy as much as they could the previous years. We've got high interest rate. Inflation is quite high. It's on the upside. Incomes are not increasing because the problem is if the economy is not growing, not many jobs are being created. We've seen the unemployment numbers do not support robust consumer spending. So manufacturing didn't do well, mining didn't do well. So the month of July for me is going to be a test to see has that improved? Have they taken advantage of the lower currency? My guess is that it's not. We're still going to see manufacturing struggling, and if mining struggles as well, as you correctly point out, that doesn't paint a very positive picture for the economy going forward, which is why the Reserve Bank is the hands of the Reserve Bank are kind of tied, in the sense that do they raise interest rate as we had expected they would with the economy as weak as it is now? I think they might have to pause and look at it at a later period. Yeah.
You know, the problem is, let's get back to the currency issue, because South Africa really has become an importing nation. Unfortunately, that's what we are. We give out our products and then import it back into the country, which is possibly one of our biggest faults, because we're always talking about that, and we need to, that's the key to job creation, is to take the products we have here, manufacture them, and then export them, as opposed to importing them back. But with the levels of the rand at the way they are, the consumer is the one that's going to suffer the most. We're talking about, I imagine, more fuel price increases for us, even though Brent crude is at decent levels. But we're sitting and looking at our currency. Everything is going to increase, and the man on the street is going to struggle the most. Let's talk about that now.
So yes, the consumer is going to be put under more pressure. You refer to the fact that we didn't quite take full advantage of the drop in the oil prices in terms of the drop in petrol prices that we saw. While we might not see an increase in the near future, certainly we never take advantage of the full drop in the oil prices because of the weaker currency. However, if you talk about importing necessities that South Africa doesn't produce, certainly you're going to see some imported inflation coming through. We hope that is not going to negatively impact food prices, because if you see food prices going up because we import them at a higher price, that is certainly going to impact that part of the consumer that depends mostly which is mostly exposed to food prices, transport costs, and that is the section of the consumers that are low income and are more vulnerable. And that's the worrying part. Consumers at the higher income spectrum can hedge against higher inflation more than consumers who are on the lower income spectrum, and that's where the brunt of the lower currency might be felt.
Yeah. So let's give some advice to consumers out there. When we're faced with the economy looking the way it is right now, I would imagine this is the time to not go buying new cars, buying new houses, overspending. It's a time to save, and perhaps you can give us an idea as to which portion of the population is really going to struggle the most at this time.
You mentioned car prices. Ironically, if you've seen the numbers that came out recently, car sales actually went down. You also want to boost that part of the economy so that GDP can grow. So it's a vicious cycle. But what you do need to bear in mind, though, is that if you do go out there and buy a car, and by the way, dealers have made it very attractive for consumers to buy. That. There's a lot of
specials out there.
Yes, a lot of specials out there, and the car industry does need our support. But if you do go out and buy a car, bear in mind that if there's a 3% change in interest rate, will I be able to service the debt? That's always the key to remember, because while the deals and the specials might look attractive now, just look at how well comfortably you can service the debt, and how that is going to impact your other spending patterns. There's not only the cars industry that you're faced with, you still need to face higher electricity prices. You possibly need to face higher food prices, as I mentioned. So it's a difficult part for the consumer, the balancing act. What should come first? Consumer spending to boost our domestic manufacturers, or higher incomes? I think it's just a balance between the two.
Yeah. Thank you for talking to us here on the program, Tendani Mantshimuli, who is an economist at Liberty Insurance. Thanks so much for trying to unpack the economy for us, because it's not easy at this point in time. As you say, it's a major balancing act. But one thing you did say, that if the currency doesn't recover from these levels, it'll be the very first time that it hasn't recovered.
Yes, so it does recover.
It does recover.
Yes, and
which
it will
is
recover.
A good note to leave this interview on. So don't think that this is going to be the level of the rand for the foreseeable future. We hope, because it has always recovered. So let's hope the same thing happens.